Today we are speaking to Dr. James Moria, the CEO of Centum and a leading voice in investment innovation across the continent.
We are removing the impediments to establishment of business and operation of business and making it easier for global service enterprises to operate.
And we will be unpacking what I consider to be the hottest deal in town at the moment, the Trific Green USD REIT, which is a first of its kind listed real estate built to deliver very attractive returns, at least 8% yield in dollar.
Many times we think this is an opportunity for other people.
Investors will also have exposure or access to what might probably be Africa's next economic chapter. Dr. James Moria, it is always a pleasure.
Thank you very much,
to sit down with you and have a conversation.
Yeah, thank you.
I know this is going to be extremely enlightening.
Yes.
Not just for the viewers,
yes,
but for myself too. So I look forward to learning a lot.
Okay, brilliant, yeah.
I always believe in starting with a story. There is always a story behind behind every creation.
Yeah.
What inspired Centum and yourself to create the Trific Green USD REIT? What gap did you see that needed to be resolved? Yeah.
No, thank you very much, Pius. Before even I go to the Green REIT, it's a derivative of Trific. It's a flow from Trific. So 2 years ago, when we were going through a currency crisis, we thought, how can we be part of the solution? And we looked at different areas where we could support the country in one, boosting exports, and two, creating more employment opportunities for our young people and stimulating demand. And we came across the opportunity in services. We thought if we could do something to stimulate services, the service sector, which can then be an exporter of services to the rest of the world, then would play a role. Now, services in Kenya, we have a balance of payment surplus, so meaning we export more in services than we import. And if you also look at services today, for a long time, agriculture was the largest employer. Services is now the largest employer. So our thought was that we could create a special economic zone, specially dedicated towards supporting services sectors, services companies that are exporters of services. And these are business process outsourcing companies, technology companies, consulting companies, really any enterprise that is located in Kenya, but is serving clients across the world. Now, that's how we ended up creating Trific. And Trific stands for Two Rivers International Finance and Innovation Center. The short of it was actually Terrific.
Terrific,
so
yes.
that's how Terrific came to be. And we then got licensed as a special economic zone. And we started with an existing asset we had, which was Two Rivers, which was designated as a special economic zone in 2023. And this would now support special economic zone enterprises in the services sector. And true, there has been a lot of demand, meaning there was a need from those enterprises. Because previously, for you now to be within a zone, first there was no zone in Nairobi there was no zone anywhere actually, exclusively for service enterprises. And service enterprises are not just looking for infrastructure, they're also looking for social amenities. Access to shopping, access to housing, access to schooling, proximity to other locations. So we had a unique location which was attractive to them. And we started off with one building, the North Tower. And previously, how other zones have worked, an enterprise needs to buy land first and put up their own building. Now, for a lot of service enterprises, yours included, you tend to be capital light as far as hard assets are concerned.
It's true.
You're probably investing more in your IP and less in hard assets. So the requirement that an enterprise needs to come and buy a building was itself a big barrier to entry to many enterprises that wanted to set up in Kenya, both in financial terms and in time. terms, and also the absence of the location. So what we solved for them were several issues. One, we provided them with the office facilities. For those who wanted to have those offices fitted out, we provide the fit out. But the third challenge a lot of these enterprises faced is just business support services around the process of setting up and doing business from Kenya. If you've not done business in Kenya before, you don't even know where to start. Where do you even?
It's a jungle.
It's a jungle.
Yeah.
And so we that was another. So in short, we are removing the impediments to establishment of business and operation of business. And making it easier for enterprises, global service enterprises to operate. So we started off with the first building, which is the North Tower, which is now over 90% let. And in fact, it's over 90% let because we added a floor on top. If we had not added that floor, it would have been over 100% let by now. And it has attracted a diverse collection of global enterprises. Now, these enterprises are exporting services and therefore they're being paid in hard currency. And therefore they're able to pay us the rent in hard currency. And what we've done is bundled all the services, including the provision of the space, into one charge. So they only pay one cost, which is the rent. Now, that was on the one hand. That's what we've been able to do. And we have demand for more. Now, where the REIT idea came is there's also demand for hard currency investments or investments yielding hard currency by investors in Kenya. So if you think about pension funds, any investor will want currency diversification. Because the process of going to invest offshore is a Herculean task. So there's a currency diversification issue even for household at the household investment level. But then they're also looking for yield. So we thought, look, if you can provide investors with yield, an attractive yield, and the advantage of the REIT is that it's tax-free. Both in the hands of the REIT itself, of the REIT, the Real Estate Investment Trust, and also in the hands of the investor. So what we get is what we're able to pass on to the investor. But besides the yield, there are also investors who are interested in impact. What am I really investing in? And what impact is it having? Now, this investment enables us to provide assets that create jobs and that have a bigger impact. So that's how the idea came in. So we are bridging the need for investors to access a high quality, listed, liquid, high yielding, hard currency, green, impact investment. And their capital goes into creating more assets, which are then solving the problems of those enterprises that want to locate in Kenya to export. And those enterprises are in turn now creating employment for our young people, generating exports, and in essence expanding the tax base.
Thank you. And I think you've touched on my next question somehow. And I've heard you say this in our conversation that we are not listing North Tower. We are not listing a real estate asset, but what we are listing is a platform. If you can just spend a minute to elaborate on that. So
you want to touch things once and create institutions. So today it's been very difficult for capital market investors to finance infrastructure in the absence of an investment grade instrument they can interact with or they can invest through that gives them a defined return within a defined risk parameter. And that's what we are creating. And this REIT will be a buyer of high quality assets that are supporting exporters of services and goods. It's just that for now, the asset we are seeding it with, the first asset, is supporting exportation of services. So it means that as long as you meet the criteria the REIT has, as long as an asset meets the criteria that REIT has, that REIT then becomes a buyer, potentially a buyer of those assets. And the ability to provide that exit for the developers is critical in the ability to secure the development financing. Because anyone putting in their money to finance a developer to put up a data center, to put up a logistics park, even when you have guaranteed offtake, where you have a client, the question for the financier is, how will I get my money back? How will I exit?
It's true.
So the REIT is meant to solve that. So it's not just the Trific USD green REIT is not just going to be focused on acquiring assets within the Trific ecosystem. It's going to acquire assets, that qualifying assets across the entire country.
Correct.
The entire Kenya. And therefore stimulate the development of green, high quality infrastructure to support exporters. So it's going to feel a very critical role. The North Tower is only the first asset that the REIT is acquiring, and there should be a pipeline of many more assets.
So literally we are creating a marketplace.
Creating a marketplace,
I've had you call this a bridge between capital and opportunity.
Precisely.
In layman terms, what does that mean in practical terms?
Yeah, you see, the opportunity is, there's an underlying business opportunity, and capital should come to support real enterprise. There are global enterprises that want to locate in Kenya, because Kenya is a very attractive location to operate from. In terms of our quality of human capital, the high quality of the education, the general attractiveness of the climate, the living conditions, the friendliness of our people, the advanced nature of our infrastructure, and now even the fiscal environment. The fiscal environment, I mean the fiscal environment within the special economic zone framework, and even generally. So there are a lot of enterprises that want to come and locate in Kenya. Now what we have been doing is removing those barriers to their entry.
Ease of doing business.
Ease of doing business. So that then Kenyan enterprises are not just focusing on Kenya demand, but you can now focus on being a global provider of services. Because if you have a high quality human capital, then your competitive advantage is to provide services globally. There are major trends in the world today. One is demographics. So the demographics are in our favor. We have a younger population. The Western society and many other parts of the world have an aging population. The second major trend is digitization, where post-COVID, services now can be provided digitally. They don't have to be provided physically where they are consumed. You can be providing a service in Kenya, but it's consumed by an enterprise in New York or in Paris or in Beijing. That's another very major trend. So if you combine those two trends, what you might see is more and more offshoring of services, where services are provided where it is least expensive to provide them. And Kenya is one of those locations. I think the third major secular trend is this issue of climate change. So a lot of investors are really concerned about the impact on the environment of the development of the country, and that's where the green aspect comes in. So that's a major opportunity.
It's a major opportunity.
But now, if you hear about this opportunity and you're sitting as a you're working in your business, you have $5,000 to invest. How do you plug into that opportunity? Many times we think this is an opportunity for other people.
For the elite.
Or for the elite, or for the other big investors. Now, that's what now the REIT is meant to address. To say, look, you can come and invest through the REIT. And we're looking to reduce the minimum amount to as low as $1,000. So that you can open up ability to participate. And then you have an attractive yield. But because unlike a fixed income instrument, the yield is also the interest income is also increasing because the rent is increasing.
It's increasing,
So now we've bridged those two worlds. We've connected capital to real underlying opportunity, and really given you a fraction of those service exports. Because the dollars you're getting, it's not like we are getting those entities that are generating shillings and we are buying dollars in the market. These are the dollars that they're generating externally that are being paid to us that we are now transmitting into the economy through a return to the REIT holders, and then getting the capital back to support now the acquisition of more assets. So you create a vicious cycle.
So somebody may be sitting somewhere watching this, this opportunity is too far from me, and what you're saying here is it gives you we've literally created a bridge where anyone can become part of something really big happening in our country.
And if you want to sell, it is liquid. You'll get your return in hard currency. So you open a dollar account with the bank, and you generate dollars into your account. You don't have to go offshore to look for that.
You can now earn dollar income while you're living
here.
While you're living here.
While you're living here, you don't have to fill forms to banks asking you a source of money. You buy, and if you want to sell, you sell your notes on the stock market.
I know. Let's talk about from an investor perspective. Let's talk about numbers. What is the return profile of the Trific REIT, and who should be excited about this?
So maybe I should point out that we are still firming up what dividend yield we want to go to market with. But right now, indicatively, we want to go to market with an 8% dividend yield in dollar. So if you were to compare it like for like, with what you'd get with an ordinary yield on a taxable return, it's something closer to 9.5, 10%. Even just if you take the withholding tax saving on its own. But this is on hard currency. And it has a growth element as well because of the rental escalation. I think the other uncertainty that has been with the REITs has been the expense component, whereby the income is fine and you've priced it based on gross income, but you've not factored in the REIT expenses. So what we've done, we wanted to take away that unpredictability from our investors, which is really in line with our theme all through. We've been taking away the obstacles. So if you think about what I explained about service enterprises, what are the challenges? You can't get a physical location. A lease was a requirement for you to get an SEZ enterprise license. Then business support services, all those are the things we've been removing. So what we've done as a sponsor, we are going to underwrite these expenses so that they are not part of your cost of the REIT. Those expenses will be borne by the sponsor. So at the end, there's predictability from income to distribution. So we want very little friction between income and distribution. Therefore, this return is predictable. We want to give investors a predictable return. Now, you also have diversification with the time, because you'll have different buildings, different kinds of businesses. But even within the building, you also have different enterprises. So, and those are enterprises then provide you with that kind of diversification. So the idea is to offer a return of about 8%, which pre-tax would be something like closer to 10% in hard currency, which in a declining yield environment is very attractive. If in the secondary market you now have yield compression, meaning the market asks for a lower yield, then you also have a possibility of making capital gain on your unit. So if, for example, you bought a share of the REIT at $1, and then the market says, no, actually we're even happy to take 4%, then it means there's a possibility of the pricing in the market moving from $1 to $2. So for these investors who come in this IPO, you may make both on the yield, and also the possibility of a capital gain in the secondary market.